take a breath for a second, because if you're watching silver right now, your nervous system probably hasn't caught up with what just happened. In the span of a few days, silver went from feeling unstoppable to feeling broken to suddenly acting like nothing was wrong at all. That kind of movement messes with people, not just traders, everyone. And the most dangerous part isn't the crash. It's what happens right after, when prices bounce and people tell themselves, okay, that's done. Because markets don't calm down just because price goes up again. They calm down when stress leaves the system. And stress hasn't left. Not even close. What we just watched was a forced reset, not a verdict on silver's future. And if you don't understand that difference, this market will chew you up. Here's the simple truth most headlines won't explain. Silver didn't fall because the world suddenly stopped needing it. It fell because too many people were leaning the same way at the same time. When everyone piles in together, the system becomes fragile. And fragile systems don't need big news to break. They just need a push. That push came fast. Stops triggered. Margins tightened. Positions were liquidated whether people wanted out or not. That's not opinion. That's mechanics. And once forced selling starts, it feeds on itself. Not because people panic, but because they don't have a choice. Now here's where things get interesting. When forced selling ends, something else steps in. Real demand. The kind that doesn't care about daily candles. The kind that buys because it needs material, not excitement. That's why the bounce showed up so fast. But fast doesn't mean safe. It means sensitive. Silver is one of the most reactive markets in the world. It's smaller than gold, thinner than oil, and far more emotional. It attracts leverage, momentum, and impatience all at once. That combination creates drama, and drama creates opportunity and pain. Now let me say something that might sound boring, but it's the key to understanding what comes next. This market is not trending right now. It's digesting. Digestion is messy. Prices move up, then stall, drop, then snap back. Headlines flip every day. People argue online about whether it's over or just starting. That noise is the digestion process. And most people lose money during digestion because they mistake movement for meaning. They see green and assume safety. They see red and assume danger. But the real signal isn't direction. It's behavior. Ask yourself this. When silver dipped, did buyers step in immediately? Did price recover without needing hype? Did demand disappear or just wait? Those answers matter. Because if demand truly vanished, rebounds would fail quickly. They wouldn't hold. They wouldn't feel urgent. What we're seeing instead is hesitation layered on top of interest. That's unstable. Now let's talk about why this kind of instability often leads to bigger moves later. After a shock, participants adjust. Some reduce size. Some swear off leverage. Some step aside completely. Others get bolder. That reshuffling changes the market's character. And once character changes, behavior changes. Silver just reminded everyone how quickly it can hurt. That memory doesn't disappear overnight. It changes how people trade the next rally. Some will rush in early, afraid of missing out. Others will hesitate, afraid of being trapped again. That tug of war creates sharp moves. Now at the outside world. The dollar doesn't move in a vacuum. Interest rates don't move in a vacuum. Politics doesn't move in a vacuum. Silver reacts to all of it. That's why it doesn't need its own headline to move. It responds to stress elsewhere. Think of silver like a microphone turned up too loud. It amplifies whatever vibration hits it. Good news, it jumps. Bad news, it drops harder. Uncertainty, it whipsaws. That's why you can't treat this like a calm investment vehicle. You treat it with respect. Now here's where a lot of people get trapped mentally. They think, if I didn't sell the top, I failed. Or, if I didn't buy the bottom, I missed it. Both thoughts are useless. Markets don't reward perfection. They reward survival. The goal isn't to catch every move. The goal is to stay positioned without being forced out. Forced out is the enemy. That's why position size matters more than conviction in a market like this. If a move makes you emotional, your size is wrong. If you can't sleep, your size is wrong. If you feel rushed, your size is wrong. Silver doesn't care how smart you are. It only cares how exposed you are. Now let's talk about the rebound itself. A rebound after a crash can mean two things. It can mean real buyers stepped in, or it can mean shorts closed positions. Early on, both look the same. The difference shows up later. If price keeps getting support on dips, real buyers are there. If price only moves when people chase, it's fragile. That's what we're watching now. This is the part of the movie where most people think the story is decided. It's not. This is the setup. And setups are uncomfortable. Now let me give you something useful, not dramatic. Instead of asking where silver is going, ask how it's behaving. Is it calm or jumpy? Is it orderly or chaotic? Is it forgiving or punishing mistakes? Right now, it's punishing mistakes. That tells you caution still belongs in the room. Not fear. Caution. Fear sells bottoms. Caution survives volatility. There's a big difference. Now I'll say this clearly so it doesn't get twisted. Silver can absolutely go higher from here. The long-term supply story hasn't vanished. Industrial demand didn't disappear because of a chart. Physical constraints didn't magically resolve. But short-term price action doesn't owe anyone anything. And pretending otherwise is how people get hurt. This rebound doesn't mean all clear. It means pay attention. Because markets only move like this when tension is high. And high tension rarely resolves quietly. Here's the part people usually miss when they watch a rebound like this. Confidence comes back faster than stability. That's dangerous. When prices snap higher after a brutal drop, people feel relief. They stop thinking about risk. They start thinking about missed opportunity. And that emotional switch happens long before the market has actually healed. That gap between confidence and stability is where mistakes happen. Silver lives in that gap. Right now, a lot of people are mentally anchoring to the highs. They're thinking, it was just there. It can go back. That's a normal human response. Our brains love recent memories. But markets don't care about memory. They care about structure. And structurally, this market is still fragile. The same ingredients that caused the drop are still present. Leverage didn't disappear forever. Liquidity didn't magically deepen. Risk rules didn't loosen. If anything, participants are more sensitive now, not less. That means the next move, in either direction, can be exaggerated. This is why rebounds after forced selling are tricky. They feel strong, but they're built on unstable ground. Think about what forced selling actually does. It clears out positions, but it also scares people. Some swear they'll never touch silver again. Others promise they'll never use leverage again. Some leave completely. That changes the mix of participants. Fewer reckless players can be good, but fewer participants also means thinner markets. Thin markets move faster. So even though the rebound looks healthy on the surface, the underlying liquidity can be weaker than before. That's a dangerous combination. Now let's talk about something that doesn't get enough attention. Time. After a shock, markets need time to rebuild trust. Not trust in the asset itself, but trust in the process. People need to believe they won't be blindsided again tomorrow. Until that belief forms, price action stays jumpy. That's why silver can rally $5 in a day and then give half of it back without any new information. It's not confusion. It's healing, messy healing. And messy healing hurts impatient people. Now zoom out just a bit. Silver isn't trading in isolation. It's sitting inside a bigger environment full of uncertainty. Currency questions, interest rate uncertainty, political tension, supply chain discussions. None of that is settled. When the world feels uncertain, people don't behave smoothly. They react in bursts. That shows up in silver faster than most markets. That's why some days feel calm and others feel like chaos, even when nothing obvious changed. Now let's address something directly, because I know people are thinking it. Isn't this manipulation? Here's the honest answer. Markets are design systems. Rules matter. Incentives matter. Margin requirements matter. Liquidity rules matter. When those levers move, outcomes change. You don't need secret meetings or villains for chaos to happen. You just need leverage plus rule changes at the wrong moment. That's exactly what we saw. Understanding that should make you calmer, not angrier. Because mechanics repeat. Conspiracies don't. If you understand the mechanics, you stop being surprised. And if you stop being surprised, you stop making emotional decisions. Now let's talk about what actually matters in the coming days. Not price targets. Signals. Does silver hold gains without needing constant buying? Does it dip and find buyers quickly? Or does it stall? Does volatility slowly compress or stay extreme? Does physical demand stay firm? Or does it fade as price rises? Those answers will tell you more than any forecast. And here's something important. A market can be bullish long-term and dangerous short-term at the same time. Those two ideas don't cancel each other out. People get hurt when they assume long-term belief protects them from short-term reality. It doesn't. That's why sizing and patience matter more than opinions. Now I want to shift to something practical, because theory only gets you so far. If you're watching this and thinking about participating in a market like silver, you need to decide what kind of participant you are. Are you someone who wants exposure over time, accepting volatility? Or are you someone trying to catch swings? Both are valid. Mixing them is not. Now think about this. If silver were truly weak, buyers wouldn't show up so quickly after a drop. If demand was fake, price wouldn't bounce with urgency. That tells you something real is underneath. But if everything were perfect, volatility wouldn't be this violent. That tells you something else is wrong. Both can be true at the same time. And that's the mindset you need to survive here. Now let's talk about how moments like this usually end, because this part is where people either protect themselves or quietly give back months of gains. After a violent move and a sharp rebound, markets don't usually give clarity right away. They give temptation. Temptation to believe the danger is gone. Temptation to believe you figured it out. Temptation to size up because the last move felt obvious in hindsight. That's the trap. Most damage in markets doesn't happen during crashes. It happens after, when people feel smarter than they actually are. Silver is especially good at this. It gives you just enough confirmation to relax, and then it reminds you why you shouldn't have. This is where discipline matters more than prediction. You don't need to know where silver will be next month. You need to know how you'll react if it does something violent tomorrow, because it will. That's not pessimism. That's history. Silver's personality hasn't changed. Only the context has. Now let me tell you something that sounds simple but gets ignored. Volatility is information. When volatility stays elevated after a rebound, it means uncertainty hasn't been resolved. It means the market hasn't agreed on value yet. Agreement takes time. Until that happens, price discovery is rough. And rough price discovery punishes impatience. So if you're feeling restless right now, that's not accidental. The market creates that feeling. It wants you to act without a plan. That's how liquidity is transferred from emotional hands to patient ones. Now zoom out one more time. Why does silver attract this kind of behavior in the first place? Because it sits at the intersection of two worlds. It's money, but not officially. It's industrial, but not boring. It's small enough to move fast, but important enough to matter. That makes it a pressure valve. When confidence wobbles, silver reacts. When trust wobbles, silver reacts. When systems get stressed, silver reacts. It's not leading events. It's responding to them. That's why watching silver isn't just about silver. It's about the environment around it. And right now, that environment is tense. People sense it, even if they can't explain it. That's why participation spikes during moves like this. That's why emotions run hot. Now let's get practical again, because this is a YouTube video, not a philosophy class. If you're involved in this market in any way, here are the mistakes that usually show up next. Chasing strength because you're afraid of missing out. Doubling down because it can't happen again. Ignoring risk because the last drop already happened. Using leverage because the bounce feels convincing. Those mistakes feel logical in the moment. They're not. Markets don't care what just happened. They care what participants do next. And after rebounds, participants usually get sloppy. Now here's the counterintuitive part. The strongest long-term trends often start with messy periods like this. Not clean breakouts, not smooth stair steps. They start with confusion. That's because large shifts don't announce themselves politely. They force people out before they move forward. So if silver eventually moves much higher, it probably won't feel comfortable on the way. Comfort is not how real repricing happens. But that doesn't mean every bounce is the start of something bigger. That's why you don't marry a narrative. You watch behavior. If silver can absorb bad news without collapsing, that's strength. If it needs constant good news just to hold ground, that's weakness. Pay attention to that difference. Now let's talk about mindset, because it's the hardest part and the most important. You don't win in volatile markets by being right once. You win by not being forced out when you're wrong. Being wrong is normal. Being forced out is optional. That's controlled by sizing, patience, and clarity of purpose. Ask yourself honestly, if silver drops sharply again, would you panic? If it spikes hard, would you chase? If the answer to either is yes, something needs adjustment. There's no shame in stepping back. Watching is a position, a very underrated one. Now I want to address the quiet pressure people feel during moments like this. Social media amplifies urgency. Everyone has an opinion. Everyone sounds confident. Everyone claims certainty. That noise creates stress. Remember this. Most people online are reacting, not planning. Most confident voices disappear during drawdowns. Most lessons are learned privately, not publicly. You don't owe anyone action. You owe yourself consistency. Now let me leave you with something grounding. Markets don't move to reward or punish you. They move to balance flows. Right now, flows are unstable. That doesn't mean danger forever. It means caution now. Silver will settle eventually. Volatility will compress eventually. Trends will clarify eventually. The people who benefit from that aren't the ones who guess the next move. They're the ones who survive the uncertainty without blowing themselves up. So instead of asking, where is silver going next? Ask this: am I positioned in a way that lets me stay calm no matter what it does? If the answer is yes, you're doing better than most. And if the answer is no, that's okay. Awareness is the first fix. This market doesn't require bravery. It requires respect. Respect the volatility. Respect the mechanics. Respect your limits. Do that, and silver becomes something you can engage with instead of something that controls you. Drop a comment and tell me what you're watching most right now: price, volatility, or something outside the chart entirely. And if you want more breakdowns like this, calm, honest, no hype, make sure you're subscribed. Because this story isn't finished. Not even close.